What is going on, everybody? It's your boy, Mr. Banks, and today we'll be going over how to spot and catch reversals. But first, we'll be going over market structure, bullish and bearish, and the top pattern to catch a reversal in the market so you never miss a reversal ever again. But go ahead and hit that like and subscribe button so you don't miss any of this educational content I put out on a daily basis to make you a better trader. Now, as you guys know, market structure is very important. Why is it important? Because market structure is going to show you what type of trend we are in. And from that trend, we will be able to catch a reversal once that market structure is broken. Let me go ahead and show you guys the bullish market structure. I'm going to try to make this video as fast as possible, but loaded with as much information as possible. Bullish market structure. How do we know if we are in a bullish market structure? Well, to break it down very simple, we are going to have a higher high, higher low, higher high, higher low, higher high, higher low. This is going to be a bullish market structure. So when we're in an uptrend, or when we say we're in a bullish market, you're going to see that there's going to be higher highs, higher lows, higher highs, higher lows within that price action. Now, at the end of this video, I will be going over a live trade showing you all the market structures, bullish and bearish, as well as how we caught a reversal. But simply put, higher highs, higher lows, higher highs, higher lows. That is going to be your bullish market structure. Know that like the back of your hand. Now, coming into the next market structure that we need to know is going to be a bearish market structure. Now, simply put, a bearish market structure or a downtrend is going to be lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. And we'll continue this trend until there is a reversal in the market. So just to refresh real quick for you guys, what is a bullish market structure? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And then when a bearish market structure, we have a lower low, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. Pretty easy to spot on the chart. Typically we're looking at a higher time frame when we look at market structure. We can also look when we are day trading to catch reversals intraday as well. But if we're trying to catch a macro or the bigger trend reversal, we're going to be looking at the 1 hour, 4 hour, daily, and possibly even sometimes the weekly time frames to catch these reversals. Now, when we see a break of market structure, as you guys can see, we have an uptrend. Again, higher highs, higher lows, and we'll typically see price action failure to create a higher high. We will create that higher high and higher low within this bullish trend or this bullish market structure. And after that, we will create a lower high and we will break this market structure, creating a lower low, lower high, lower low, lower high, and switch into a bearish trend. Now, I want everyone to see this clear as day because this is what happens in stocks, and especially when we have reversals over and over again. We will have a market structure. So start to think about the stock market or looking in your charts as a structure of the market. What type of structure are we currently in? Are we in an uptrend, in a bullish structure, or are we in a downtrend, in a bearish structure? Start to look at the charts in this way. Now, when we have a bullish structure, obviously the reversal is going to be a bearish structure. So we have the higher highs, higher lows here, higher highs, higher lows here, and then we create a lower high. So we are failing to have a continuation of this structure. Now, there is some times where we have a lower high, we bounce off of this higher low and we continue up. That means we're going to have a sideways or choppy market, and then we have a continuation up. But typically we're talking about reversals in this video. So we'll have a lower high and then we'll have a break of this market structure. So if I were to draw a trend line right here, you could see that there would be a break of this market structure, creating a lower low, lower high, lower low, lower high, and lower low, completing the reversal within this market structure. Now, the top pattern to know when we have a major reversal, it's typically going to be called a head and shoulders. Now, this gives the highest probability of a reversal when we're catching these at a top of a trend reverse or at a bottom of a trend reverse. So say we have a bullish structure here, we're going to have that higher high, higher low, but then we're going to create a lower high, breaking the market structure, heading lower. So in a head and shoulders, you'll have a left shoulder, you will have a head, and you'll have a right shoulder. So what this is telling me is that the buyers have dried up, and now we are now having sellers taking over the price action. So when we have these higher highs, higher lows within a bullish trend, we have demand driving that price higher, some profit taking, demand coming back in, driving the price higher, profit taking, demand coming back in, continuing, so forth. And when we have a downtrend or a bearish market structure, we have these sellers now taking over, driving the price down. We have where it comes into a demand zone, price moves back up because there are buyers coming within this demand zone. It's pushing the price back up, but the sellers are still in control, overwhelming, pushing the price even lower until we hit another demand zone where buyers are stepping in, pushing the price higher. But then the sellers again are in control, taking over, pushing the price lower. So as you can see, we have that break of trend. You can see the shoulder, head, shoulder. So again, what this is showing you is that we have the bullish market structure. We're coming down, creating that higher low, and then we have a lower high. This is showing me that after the demand is bought up, we cannot push the price higher for a continuation of the pattern. There are sellers now stepping in, creating a reversal trend change. Now, this is also good to know for when we are in a downward trend and we're catching a reversal to the upside. It'd be the same thing, but the opposite, right? We have our shoulder here. We have sellers pushing price down. We have demand pushing price up. We're creating a lower high, creating that second shoulder or the right shoulder. And then we have a break of structure pushing to the upside. So head and shoulders is one of the best patterns to know to catch a reversal. You can see where we don't have that continuation of the pattern. We're putting in the lower high or the higher low for the bearish structure, changing the structure, showing us that there is a flip in demand from either buyers or sellers, depending on if we are catching the reversal from an upward trend or we're catching the reversal from a downward trend. Now, let me get into a live trade with you guys. We're going over SPY today. I just want to show you guys quickly. We did take the 507 puts here, 508 puts initially, and then also the 507 puts. Showed this head and shoulders to the group today. And as you guys can see, we banked 100%. Shout out to the group for dominating this trade with us. But let's get into the actual trade. Now, I was going to show you what a bullish market structure is. Now, as we can see here, SPY since October has been in a bullish market structure. Why do we see that? Higher highs, higher lows, higher highs, higher lows. You can see that the higher lows, higher highs, higher lows, we are continuing with this bullish structure, creating higher highs and higher lows. Now, right before we had this upward trend or the bullish market structure here on the daily, we did have a bearish market structure. As you can see here, we put in lower lows, lower highs. Did have a break here. As mentioned earlier, there are going to be some times where we have a break of structure, it moves sideways, and then we have that continuation of the structure we were just in. So just because we are in a structure doesn't mean if we have a break of it, doesn't mean we're going to have a full reversal. But the pattern to look for is that head and shoulders. So we have a lower low, lower high. We're coming back down, lower low, lower high, and then we're pushing back down. And then we had a change of structure here. Now, going into the trade today, what I was seeing is we can see it pretty clearly on the 1 hour time frame. As you guys, as I said, mentioned earlier, the 1 hour, 4 hour daily, great to catch these structures. The 1 hour, 4 hour going to be a little bit better, catching more of an intraday move on these reversals. So as you guys can see here, kind of draw this up for you guys. Let me get my pen out. As we can see here, we have shoulder, head, and shoulder. We had a continuation of the break for the trend. Now, as you guys can see, we did have a, right, bullish market structure. And then we had the head come back down, right? Right shoulder coming in, creating that reversal that we can see right here for that head and shoulders, creating that reversal. Now, as you guys can see here, we had this bullish market structure coming in. We put in the left shoulder, put in the head, put in the right shoulder, continuing downward into this demand. So I'll show you guys here one more time. Check this pattern out. We can also see this pattern yet again. Pattern that I drew. Use a slideshow. You can see first shoulder, head, second shoulder. We had that bullish market structure, first shoulder, head, second shoulder, and we had that price now moving down onto this trade. This is how you will be able to catch these reversals within the market. So just to review real quick for you guys, bullish market structure is going to be higher highs, higher lows, creating an upward trend, a bullish market structure. And then we will have a bearish market structure, which is going to be lower lows, lower highs, lower lows, lower highs. One of the top patterns to notice when we are going to catch a reversal is going to be this head and shoulders pattern. We'll create a left shoulder, right shoulder pattern. We're creating this reversal, and this is how we caught those puts today. Hope you guys learned a lot on catching market reversals. Learn it, head and shoulders, practice it on the chart so you guys can get a better feel for it. Hope you guys never miss a market reversal again. Understanding market structure from bullish to where we get a change into a bearish market structure. All trading is, or understanding reversals is going to be where we can notice a break in a market structure. If we are in a bullish market structure, let's look for that break in the bullish market structure to now turn to a bearish trend. And likewise, if we are in a bearish trend, look for that break of the bearish market structure to now turn into a bullish market structure. Look at the charts and look at trading or the intraday from the bigger picture, the market as itself as a structure. We're going to be in a bullish one, a bearish one. Sometimes we're in a sideways one. This is going to be a sideways one, but then we broke the structure, right? We broke this bullish structure into a bearish one. And that is how we caught puts today. Never miss a reversal in the market again. Like, comment. If you have any questions, guys, drop them in the chat. Last thing I'll say is I believe in each and every one of you. I know you guys are going to become amazing traders. Believe in yourselves. You guys can do it. Never give up. Until next time, guys, my name is Mr. Banks. Love you guys. Have a great one.